Meanwhile, the UK has confirmed it will hold a general election on December 12 after Prime Minister Boris Johnson gained approval from Parliament on Tuesday night. The early ballot is intended to break the Brexit stalemate, which has paralysed British politics in recent months. Well, it's the morning after this approval was given and more reactions pouring in. Juliana has the updates. Hello, Juliana. Good afternoon again. Good to see you. Well, a study by the National Institute of Economic and Social Research has found that Boris Johnson's Brexit deal will leave the UK £70 billion worse off than if it had remained in the EU. Now, is this finding a topic of discussion in the street of London today?
Yes, Chimamanda, it's certainly something that a lot of people are talking about. It was trending on Twitter just before I came on air, and we are currently seeing the first PMQs, Prime Minister's questions, in the House of Commons. This is the first one that's taken place since they've announced they'll be going to the polls. And the opposition party of course, seized on it. Talk about starting your campaign on a bad set of data. This £70 billion is the equivalent of about 3.5% of Britain's GDP, and this independent think tank is really one of the last think tanks to really look at some of the details that some members of the public won't be able to foresee when they look into the withdrawal agreement. And they are saying that if we did stay in the EU, we'd be £70 billion worse off. Now, the Treasury were very quick to hit back at this data. They said that it's scaremongering, and the deal that the think tank has used to quantify this data isn't the final deal that Boris Johnson will negotiate with Brussels. But it's certainly very worrying, particularly as the economy is one of the main things that have really been paralysed in this whole state of paralysis that the UK are in. So if these details are right, then, of course, as to be expected, Labour and the rest of the opposition parties will be campaigning against whether or not people want to be worse off. And we know that nobody in the UK would want that.
That's a huge one, really. So I hope they're able to get it through. Anyway, in corporate news, the passport and banknote maker De La Rue has issued a second profit warning. That's in 5 months. That's after losing out on the government's contract to make new blue UK passports post-Brexit. Now, it has said profits will be significantly lower than market expectations. What more can you tell us about this story?
I can't hear you very clearly, Chimamanda, but I think you're asking about De La Rue. De La Rue, they are a 200-year-old British company. They used to, before, of course, it's been shipped to the EU, they used to print British passports. And, of course, they do print the world's largest denomination of banknotes. And they have issued another profit warning to their shareholders. And as soon as they did that at early trading, their shares were down by about 30%, which is major. And over the past couple of years, their shares have dropped by 80%. They've been citing several reasons, but one of them, and that's a big one, is that they were investigated with some dealings that they were doing in Sudan and in South Sudan, and about 80% of their market was completely wiped off, and their reputation is in tatters. So they've shipped in a new CEO. He was shipped in just about a couple of weeks ago now. And what they're asking their shareholders to do is to be patient, that they're going to be having a thorough review of their practices. And hopefully they'll be trying over the next couple of months to win back some of those clients that they've lost so steeply over the past couple of years.
All right, let's look at the market. It's past midday now. How are the markets taking shape?
Well, sterling is good because there's an election, so there's some certainty. And when that happens, typically the FTSE is not great. But let's have a look at those numbers. At intraday, the FTSE all-share is down 0.07%. The FTSE 100 is also down 0.05%. And the FTSE 250 is down 0.20%. In currencies, the British pound is up on the US dollar by 0.19%, up on the euro by 0.08%, and up on the Japanese yen by 0.16%.
Okay, thank you, Juliana, and have a very good afternoon. And in Asia, The market fell ahead of the U.S. Federal Reserve's interest rate decision set to be announced later stateside. The Nikkei 225 in Japan slipped 0.57% to close at 22,843.12, while the Topix index finished its trading day 0.19% higher. South Korea's Kospi closed 0.59% lower at 2,080.27 as shares of Samsung Electronics fell 1.37% ahead of the industry heavyweights earnings release. Mainland Chinese shares finished their trading day lower, with the Shanghai Composite slipping 0.5% to around 2,939.32, and the Shenzhen Composite also fell 0.85% to approximately 1,628.62. Hong Kong's Hang Seng Index shared 0.48% as of its final hour of trading, while Australian shares declined on the day as the ASX 200 slipped 0.83% to 6,689.50. And U.S. stock index futures were mixed this morning as market participants waited for the Federal Reserve's decision on interest rates. At around 3 a.m. Eastern Time, Dow futures slipped 20 points, indicating a positive open of more than 6 points, while futures on the S&P, which briefly touched an all-time high in the previous session, was lower. The Nasdaq was marginally higher. On the data front, ADP payrolls for October will be released at around 8:15 a.m. Eastern Time. An advanced reading of real GDP for the third quarter will follow slightly later in the session. In corporate news, GlaxoSmithKline, CME Group and Yum Brands are among some of the major companies set to report earnings before the opening bell, while Apple, Facebook and Starbucks are scheduled to report their latest quarterly figures after market close. And away from the equities market there, back here on the African continent, Egypt's finance ministry says 5 international lenders have been selected for a new dollar-denominated bond offering. The banks are Citibank, JP Morgan, BNP Paribas, Natixis and Standard Chartered. Although no specific date was given, the finance ministry says the offering will be made in the 2019-2020 financial year. And Zimbabwe's central bank plans to introduce some notes and coins in the country's dollar currency in the next 2 weeks as the latest step towards restoring the domestic currency. The country's central bank governor, John Maguduya, says the new currency consisting of $5 notes and $2 coins will be introduced gradually to avoid raising inflation. The new currency is expected to circulate alongside the bond notes and coins introduced in 2016 as a substitute for the US dollar. Zimbabwe's central bank unexpectedly reintroduced the Zimbabwe dollar on June 24, ending a decade of dollarization after it was abandoned in 2009 due to hyperinflation. And more to come after the break. Do stay with us.